Good morning. Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We'll get started here in just a moment. Just give us a second to go live on all the different platforms here. Appreciate everybody tuning in nice and early. We put the chat up on the screen. Go ahead and drop a comment there in the chat. Happy Friday, everyone. Fridays, great days to make calls as loan officers. Saturdays as well. All right. Appreciate the comments coming in there. All right. So it looks like we're live on all the different platforms, so we'll go ahead and get it started. We're going to take the chat off the screen for now, but keep dropping comments there in the chat. You can drop any questions you have in the chat as well, and we'll make sure to get to them here. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and what we do every weekday at 11 a.m. Eastern on this show is go through our live actual mortgage rates, and then we do a deep dive into a different loan topic. Today's topic is our favorite kind of loan, our flagship product here at the Mortgage Calculator, which is our DSCR loan. So our sales manager, Jose, with 28 years of experience, will be taking us into a deep dive into DSCR loans. But before we do that, we'll do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and let's see what the rates are looking like this morning.
All righty, let me switch my screen and we will check it out. So as Kyle mentioned, this is our pricing tool. This will show us the general rates for today. It's just after 11 a.m. Eastern, so all of our standard programs here are live. So we'll set up a basic scenario to pair the APRs across the program. If you'd like a full loan estimate, all of the itemized fees that go into the APR, please get with our team members. We have over 300 licensed loan officers. For the scenario, we'll set up a $4,000 loan amount, set the LTV to 80% loan, 20% down payment, and we'll ask the computer to find the lowest rates we can offer for conforming conventional, and then we'll compare that to FHA, which is usually the second option for most borrowers. And we'll check out our expanded guideline options where we have over 5,000 unique programs using alternative income. So also we offer VA and USDA. VA is only for eligible vets and active service members. If you are, let us know. USDA is only for eligible properties. So if you are looking in those places, let us know. But we'll start today with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos here, we'll use a credit score of 760 and an estimated debt to issue here of 40. So let's check out the conventional options. And as markets continue to be a little bit unfavorable for us, we see this went up a little bit more. 6.49 rate for 2.375 discount points puts the final APR at 6.777. Yesterday we were a touch lower there, so definitely lock those in before they go up anymore. But a good option for our customers that need to use conventional here. Now, if our customers don't qualify for conventional, the next option we typically want to compare is an FHA option. So we'll set everything up the same, and this time we'll select FHA, which does allow more credit issues as well as a much higher debt to income ratio, but we'll keep everything identical so we can compare apples to apples here across the programs. And as usual, the FHA is a touch cheaper here, so 5.75 rate for 2.375 discount points puts the final APR at 6.687. So our customers that qualify for both, FHA is just a touch cheaper in this scenario. And our customers that need to use FHA, this is awesome. This APR from a mortgage insurance. So this final APR is great because it is actually comparable or even cheaper than conventional for our borrowers that need to use these programs that allow a little more leniency. Now, where we love to specialize is if our customer doesn't qualify for any of the standard conventional or FHA programs. Most other banks or lenders will have to deny that customer. But that's where we love to present our 5,000 other options here under expanded guidelines on QM, where we can change the income type. So now we have a new option pop up. So if our customer doesn't qualify with 2 years of tax returns, which is what's required for conventional or FHA. That's also full doc here. We'll typically choose an alternative. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. We'll fill those in a minute here. And personal bank statement 12-month is the most common. That's what we'll use for the demo. We also have RSU, stated income, BOE, 1099, P&L, all kinds of options here. But the 12-month personal bank statement is the most popular for employed borrowers. Many times when our borrowers are self-employed and they submit 2 years of tax returns, they may have various write-offs or just a little bit more income. Either way, we can help them. No tax returns at all, just their last 12 bank statements, and we'll determine a debt-to-income ratio here of 40% in our example, but no tax returns at all, just their cash in the bank. Employed borrowers qualify for much more income this way. So let's check out the non-QM options. And again, non-QM much, so about the same, so that's good. 6.875 rate, 2.45 discount points in cost, 2.425. Puts the final APR at 7.282 for this. And as usual, we are within about a half a point of conventional there. So great option for our borrowers that need to use these alternative programs. Down, you see we have hundreds of variations of these bank statement programs. Some of these towards the bottom at higher rates and costs may allow bankruptcies, foreclosures, other credit issues, and may allow different ways to calculate the income. So hundreds of variations. Please let us know if you need some help here, and we'll find the best ones. And for our final two demos, we always do investment properties. So totally different thing here, looking to help out our investors. We'll set up the same scenario, $400,000 loan amount, set the LTV to 80% loan, 20% down payment. And we will compare the lowest rates we can offer for conforming conventional for an investment, and we'll compare that to our non-QM expanded guidelines. Remember, the government programs, FHA, VA, USDA, work for investment properties, so we'll simply compare these top two here. We'll start with conforming conventional. Everything will stay identical as all our demos. We've only changed the occupancy. So let's see what comes up here. And as usual, and as rates go higher, the gap was closing for a bit there between these programs. Now it's widening a little bit. So again, this portfolio option is at top because it's not a true conventional option. It actually does not have the loan level price adjustments that are required by for their programs, but it does use all the same guidelines. So the option 6.875 rate for 3.375 discount points, puts the final APR at 7.277. So good option that's not necessarily conventional. Definitely recommend our borrowers check that out. And the first true conventional here coming in at 7% rate, 3.5 discount points it costs, puts the final APR at 7.419. So a little bit more expensive here when you add the conventional loan level price adjustments that are now required for investments. So definitely recommend all of our investors out there check out some of these portfolio options, but more importantly, check out our non-QM options. So for the final demo, we will explore the non-QM, aka expanded guidelines here, options for investments. So first off, the most popular income type that we can use for a non-QM investment property is our DSCR. It's because require any income or employment info or documentation on that from our borrower. Simply use the estimated rental income to determine a DSCR value. It stands for debt service coverage ratio. If the rents can cover the expenses, aka the property will cash flow, that's a ratio of 1 or higher. And we even have options for ratios less than 1. But for the demo, we always put 1.5 so we can see all the programs pop up. And finally, a prepayment penalty must be selected. 3 years is standard on these programs. That's what we always choose. There are options for no prepay. That costs more and limits the programs. And there are some options for 5 years, which does save some money, but limits the programs. 3 years is most common. That's what we use here for the demo. So smoking DSCR rates here, 6.875 rate, 3.4 discount points it costs, puts the final APR at 7.386. So actually beating conventional there, not quite beating the portfolio option, but beating conventional. I'd still say 100% of investors would choose these DSCR. If we scroll down, notice there's hundreds of variations of DSCR we have here. Some may allow bankruptcies, foreclosures, issues. Some may allow different ways to calculate income, all kinds of different options here. And this is also going to be our topic for today. So let me me go ahead and switch my screen. And we'll get into Jose's topic for today, our favorite types of loan, DSCR loans. Tons of flexibility, tons of different options. We do specialty shows all the time of special property types, special income types we can use to calculate. But this is just a general overview of programs. You see me do the live pricing every day. That's the basic scenario. So Jose can obviously explore some different options here. So Jose, if you're ready, let's start our cool DSCR options that we have available.
Good morning, everybody. I would love to show the multitude of options, but obviously we're restricted by time here. So we will show the most common options for our DSCR loans. Now, first, let me get into what we are talking about when we are referring to DSCR, right? Debt service coverage ratio. That's what DSCR stands for, which is an actual calculation. Debt service coverage ratio is you divide the gross rental income that property is generating, and you divide that by the total housing expense of that property, and that would be principal, interest, taxes, insurance, mortgage, and this one, excuse me, not mortgage insurance, association fee, if applicable, and then at that point, see if you are within where you need to be. Now we have our standard option is if it covers at least one on a one-to-one basis, or 1.0 DSCR. And then if it covers more than that, you may get a break. You're looking at a 1.25 is another category, 1.5 is another category. And then we have for below 1.0, and actually all the way, and then below 0.75. So those are all different categories that we have to consider. Now, DSCR loans do give us flexibility also with other popular loan types, like, for example, short-term rentals, right? When we have short-term rental properties, the DSCR is the preferred option because they do give us flexibility in how we can calculate the income. And in some cases, we even have DSCR options that let us use short-term rental income components. Specifically, the most exciting one that we're talking about here is AirDNA, right? That means AirDNA is a database that lets you project the income on a short-term rental, which is very cool. So let me show you the options that I have today. So again, DSCR, we can calculate income based on long-term rent. We can calculate income based on short-term rent. We don't necessarily need to have leases either, because we can use the market rent. So in our first example here is 15% down for a one-unit purchase. And here we're figuring this at our top credit tier, which is 760 plus. So in this case here, and the 15% down DSCR is the unicorn for the investors. So for this one unit option, we are looking at 8.625 as our lowest cost option and 7.75 as our lowest rate option for our one unit DSCR with loan with 15% down. Now, we do have now a 15% down option that is applicable for 2 to 4 units as well as the one unit property. So rate is a little bit higher, or at least the cost on the rate here. Our lowest cost option is 8.5% at 2.15. And in this case, the other option, 8.5%, was costing 1.525. So a little bit more expensive for this option, which does allow 2 to 4 unit properties in this 15% down DSCR loan option. So now we have another option here for your 1 to 4 unit property with the more standard 20% down. So this is an 80% loan to value loan. And this is the one that's going to give you the best rate options. You're looking at 8.125 is our lowest cost option at a cost of 0.025 points. And you can buy that down to 7.125 for our DSCR loan, 1 to 4 units with 20% down. So now I wanted to mix it up a little bit here. This is our DSCR option with a 620 to a 639 credit score. So very low score there, but we can still do 25% down. So you can still attain 75% loan to value on your 1 to 4 unit with a credit score anywhere from 620 to 639. 10.5% is your lowest cost option. 9.625% is your lowest rate option for this 25% down option with a 620 credit score. So now we have an option here with our lowest credit score option, 575. This is a 35% down, 65% LTV. By the way, this same LTV of 65% is available for purchase. For cash out refi for this same DSCR option with a 575. There'll just be a little bit of a rate add-on for the cash out component of this transaction, but LTV will still be 65% with a 575 credit score. Now, our last two examples are going to be our low ratio and no ratio DSCR. This is for when the property is not cash flowing on a one-to-one basis. Yes, this is a little bit hard to wrap your mind around this one, but this is a loan that is possible for the investor when the property's gross rental income does not fully cover the property's total housing expense. So this is our low ratio DSCR option, where the DSCR is between 0.7 to 0.99. That means that the gross rent covers anywhere from 75 to 99% of the total housing expense for this option, low ratio DSCR with 25% down. And you're looking at 9.125 here with a little bit of a lender credit, which is amazing. And you can buy that down all the way to 7.75%. And then our last option here, by the way, the low ratio and the no ratio loan options are very popular to use with short-term rental properties when short-term rental comps are either not available via AirDNA, or they're not available because the appraiser was not able to find any, right? Or they're not available because the current owner, the seller of the property, is not operating the property as a short-term rental and does not have the short-term rental revenue reports that they can provide, because that would have to come from whoever is currently operating the property as a short-term rental if the property is a purchase. So in this case, now this is our no ratio DSCR, where the property does not even is less than 75%. So the gross rental income covers the total housing expense less than 75% for our no ratio DSCR. So still with 25% down, we can still go anywhere from 10.375%, which is our lowest cost option with a little bit of a lender credit, $300. That's pretty cool. And we can buy the rate all the way down to 9% for our low ratio DSCR purchase. So we've gone over the low ratio DSCR purchase, the no ratio and the low credit score with a 575, low credit score with a 620, and then we're talking about 20% down and 15% down DSCR, and the 15% down for a 1 unit only and 1 to 4 unit. So many DSCR options at the mortgage calculator for our investors, because remember, these DSCR loans are for investment properties only.
All right. Thank you, Jose. Our favorite product here. Love the DSCR. Definitely our most popular loan type. I do not see any questions, so we'll go ahead and wrap it up here. Remember, we do this 11 a.m. Eastern every weekday where we go through the live mortgage rates and then do a deep dive into a different loan topic. So we'll have some new topics for you next week. Thank you, everybody, for tuning in. Happy Friday. Everybody have a great weekend. We'll see you on Monday, 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.